Good afternoon, George Cavaligos for HFT Bonds and Notes. Wow, what else can you say? You know, look for a bounce last night. We didn't get much of a bounce. We didn't get much of anything. Last night's range in the 10-year, I think, was 06, 04 to 10, some silly number like, or no, it was worse. It was 06 to 10 when I got up this morning at like 5:30. Horrible 4-tick range. Came in this morning, market was a little weak, and we got some data, and then it got real weak and never bounced, man. I mean, we tore through support levels like through tissue paper. I guess people were a lot longer than I thought. The hedge funds we knew were long. I thought there was enough shorts on the small spec side that we would see better bounces, but market doesn't trade like anybody's short. You know, we haven't been able to bounce. I think the best bounce we've seen today is about 4 ticks, and we're just sitting right on the lows, and it just won't bounce. I gotta imagine there's some more long liquidation to come overnight, maybe even into tomorrow morning, and then obviously we get the non-farm payroll data. You guys that have been following me here know that I'm looking for a bigger number. I spoke about it earlier this week. I forgot who. Somebody on Twitter, I think it was Ed Bradford, pointed out that when we got the services ISM number, the employment number within there correlated with a 200,000 or greater non-farm payroll number. You know, we're reaching a little bit there, but then we saw this morning jobless claims were down again, continuing claims were down. All these things seem to be pointing to at least some kind of improvement in the job market. Not sure where it's coming from, but it's there. So we're not going to fight it. You know, I was just looking actually, getting ready for the webinar this afternoon. You guys don't forget, webinar 3 o'clock Chicago time this afternoon. Ashraf from London about currencies, myself about the bonds and notes, and then Fari about equities. Hopefully we can get a good crowd in there, and it's free. Come and take a look. Also, you know, guys, again, I'm getting hundreds of people on these YouTube videos. You guys all love the free stuff. You get a lot more good stuff intraday if you come and join our chat room. Give it a try, guys. 7-day free trial. Doesn't cost anything, and it's pretty cheap overall, you know, to come and chit-chat with us all day long. But market now, obviously, we got the non-farm payroll data tomorrow. It's a big number. No buyback tomorrow, which is kind of odd. I'm not sure why there's no buyback tomorrow from the Fed, but the buyback didn't matter today. They were buying 5-year notes, the 7-year notes, and the market didn't bounce at all. So we just, you know, continue to see this long liquidation. And now we got some interesting stuff going on. We're seeing some charts making new lows, depending, you know, if you're looking at a active front month roll chart, that we're making new lows. If you look at a June contract chart only, we're not making new lows yet. And I'm looking at that June chart and saying we got to go and test some of those lows, or at least some of the intermediate lows that still remain on that chart. On the June 10-year, we've got lows down around, oh Lord, we haven't even taken out the lows from last Monday on the Italian election debacle rally. That was 130.20, no, sorry, 130.15 plus, sorry. So we've got that. We've got 130 even plus. We've got, you know, all kinds of levels in between here and there that are still showing up. I'm not sure how meaningful the active roll chart is where we're making new lows, but I do think we're bound and determined on these June charts to go and test the old lows. We're taking out the 618 retracement on the bonds. We haven't taken that out in the notes yet. The 618 retracement of the previous rally in the notes is 130.16 plus. You know, I'd been thinking that this was some kind of a B-wave move down, and that's still a possibility. It bugs me a little that the rollover charts are making new lows. But, you know, we've still got some 618 retracements, which is a common B-wave target. You know, B waves are tough. Could be new low even by a little bit and still be a B wave as long as you snap back into the range quickly. So we'll see what the number brings tomorrow. I'm personally leaning towards a stronger than expected number. I think 200,000. You know, guys were saying that if you get like a 160 number, which is the previous expectations, and some of the news services are still looking for that the markets won't rally that much. I think the bond market will rally on a number like that. back up to the highs that we saw from earlier this morning. What was it, 143.03? I think that would be a nice spot if we see any failure type in that 143.03 to 08 area. If the market looks like it's going to fail, that'd be a nice spot to put some shorts back on. We do have the auctions next week again. Remember, guys, 3 years, 10 years, and 30 years. It's also, thank you, GoCall, for pointing it out. It's equity OPEX next week, option expiry. Typically a bullish scenario for equities. So equities up, bonds down, into the auction, cover on the 30-year auction, maybe even get long at that point, and then we'll see what happens. That's the pattern seasonally. I think we're still looking for the weakness seasonally, but I think you can play these little wiggles, obviously, you know. All right, guys, see you later in the webinar. Come and hang with us. Love to have you join our chat room. Trying to build up a nice community there, and it's not like I'm the guy. You know, we want feedback from everybody and ideas from everybody too, please.